If we get traction on quantum, we could have a new all-time high very quickly, I think. If we don't, we may not get one.
Bitcoin is up like 20% against gold, but the sentiment is just terrible.
That kind of backdrop is often a really bullish sign.
Is Bitcoin pricing in quantum risk already?
It's fully priced in, the risk. It's a good opportunity. Some of the biggest core developers recently said that's not even our top 100 priorities. And I'm just like, this is the only priority that Bitcoin should have. Nothing else matters. Bitcoin, which has been in a massive downtrend for the last 9 months, completely flipped the script in the last 2-3 weeks. Those are very strong signals. You usually only get every couple of years in my experience.
Welcome to the Verified podcast by Bitcoin Suisse. None of the discussed is financial advice, of course. It's all for informational and entertainment purposes only. So sit back, relax, and let's dive in.
Welcome back to Verified. For the second time in a row, we are hosting a Charles. Last time it was Charles Hoskinson. This time it's Charles Edwards, the founder of Capriole Investments. And also Capriole charts. They host one of the most widely followed on-chain indicators. I think it's very valuable what you're doing, Charles.
Oh, thank you, Dominic. That was very kind, and great to be with you, Luca and Dominic, and look forward to the chat.
Let's start with a little bit macro topics, zooming out how macro is driving different asset classes right now. We know in the last couple of weeks, obviously the Iran conflict, Strait of Hormuz, supply chain disruptions are driving markets, inducing a lot of volatility. I think silver on the 30-day rolling had like way higher volatility than Bitcoin, for instance. Interesting developments. Maybe guide us through how you digest the current geopolitical tension. Let's say, what do you expect in terms of impact? There's also some latency probably priced in, because it takes some time until this Strait blockade also translates into maybe semiconductors, the automotive industry, and in the end, the consumer.
Definitely a challenging, uncertain time. There's always a bit of that in the world, but I mean, geopolitically, this is definitely one of the biggest shocks I think we can say we've had in the last few years, in the Western world at least. I just wrote a newsletter a bit about this and published that just before this. But essentially, wars in general, as strange as it sounds, are bullish for equity and risk markets. So if you go and backtest the last 100 years of wars, roughly 80% of them, the market is up in the following 3, 6, 9, 12 months. So that's something to keep in the back of your mind, no matter how easy it is to get into the fear and uncertainty and that comes out of this event. That is kind of like the background statistic. The nuance here, I suppose, is obviously the Strait of Hormuz, as you mentioned, where a lot of the world's oil goes through, and that's something that's a bit nuanced. So it's definitely a risk factor. I think generally the market today is telling us it's more optimistic than concerned about where this is going. Whether that be just in terms of a potential resolution. We have the ceasefire. We have Iran said in the negotiations in the last few days that they would potentially do a 5-year block on nuclear weapons, that sort of thing. Obviously, nothing's locked in and it could change tomorrow, but generally the markets are pricing in it. Either they don't care or that they're optimistic on where it's going. We see that because price of equities is higher than before the war already in the last few weeks. We see that oil has dropped back below $100. $100 is a pretty key level. The VIX, the volatility index for equities, went to over 30. That's typically a high volatility level that happens during major risk-off events, wars, financial collapses, etc. Then it dropped back below 20 in the last days very quickly. And 20 is a pretty standard level, which basically says the market's risk on. And the option market's not too worried about it. And then at the same time, you have assets like Bitcoin, which has been in a massive downtrend for the last 9 months and underperformed basically everything, completely flipped the script in the last 2-3 weeks. It's outperformed everything. So the highest, if you will, risk on asset is now trading with relative strength against everything else in what many people are concerned as a risky or fearful event of the war. So it's actually a lot of positive signs of strength from an investment point of view, and obviously not necessarily geopolitical and humanitarian. But in terms of investing, it's actually looking really strong right now. We have to be obviously flexible to the data and events and things that may happen in the coming days. But right now, it's probably, for Bitcoin and other markets, probably the best it's looked in 6-12 months, I would say. Yeah.
Interesting. We also saw that some form of inflation already hit with the recent CPI readings. And also, if you check the dot plot, it's very clear that kind of any rate cuts are almost off the table right now. Do you think that will have some implications on risk assets, like further down the line, maybe across like 26?
Yeah, that's definitely they're great. They're all great points, right? The biggest risk is those things that we have pressure on supply chains, which makes the cost of all fuel and energy go up as it has been, but on a consistent basis, which can flow through to pricing, inflation, and then higher interest rates potentially. So that's the risk scenario, and that's definitely out there. But I think the key thing here is sustained higher prices and whether or not that will happen. And right now, I think it's a bit too early to tell. So I can just share a quick chart. Yeah. So I'll just remove a couple of things to simplify it. But you've got the S&P 500 in the background, and then the gray line here is oil prices. If I just go to weekly, you'll see essentially that we get these periods where oil prices year on year, this is the bottom line, spikes up aggressively, and markets usually don't like that. For example, 2000s and other periods here. Not always, but it's generally not a great condition for risk markets. So we are definitely in that risky zone right now. The question is how long it will last. Given oil's now below 100 again, given we're potentially the strait being opened with either a ceasefire and or blockade by the US, we could end up in a scenario like back here where, it spikes up and then, kind of grinds down over months or years and markets generally go up. So it's kind of remains to be seen. Like, I think oil is definitely a key metric to monitor for the coming months and potentially years to see where this goes. But if it continues to come down as it has, and maybe that just kind of grinds down slowly, that could then be a healthy backdrop amidst the market, which is seeing tons of growth and expansion really driven by AI, and GDP is kind of forecast to grow multiples higher than we've ever seen before in this next few years. So I think it's easy to price in the pessimism from this, and it could play out, and it's definitely something to watch, no doubt. But I think the market is now kind of weighing all of this information at once and saying, well, the oil risk is somewhat contained, definitely not going away anytime soon. But the bigger picture right now is the massive growth story that is AI and kind of the leapfrog that we're going through in 2026 with agents and AGI. And that's being priced in. So we see that in VIX, right, which I talked about earlier here. There's this blue line, it spiked above 30. You get that in major risk-off events. And then when it drops back down, you typically have strength in markets. And this also works not just for equities, but also nicely with Bitcoin as well, as a barometer for opportunities. You can pretty quickly scan that and see whenever it's green and it's spiked up and then come back down, you've had near-term or long-term opportunities for Bitcoin. So that's kind of where I'm looking at all that. I mean, if we chat in 3, 6, 12 months and oil's above 100, I'd be pretty deeply concerned. It just kind of requires sustained high prices to really flow through and impact long term. Yeah.
Okay, I see.
Yeah, I agree. What I think is so interesting also, like you mentioned stocks, they're basically at all-time highs again, S&P 500. Bitcoin
Just below,
is outperformed. Yeah, just below.
Yeah.
Bitcoin is up like 20% against gold, for example, since February. Crypto has also Bitcoin, also some altcoin outperformance like Hyperliquid or BitTensor and other coins. They performed really well, but the sentiment is just terrible.
That's the other thing. Like, yeah, you can cut that across many metrics. Even the S&P 500, the Fear and Greed Index, across asset allocations have come right back in the last weeks. within crypto, you just look at the Twitter timeline, everyone's been pretty depressed. Multiple people calling for 40,000 a few days ago.
Yeah,
People
it's
calling
crazy.
for nuclear war like just a week ago in Iran, which obviously didn't happen. And that kind of backdrop is often a really bullish sign.
Yeah,
And markets often bottom in those kind of conditions. So it makes me feel pretty good about where the market's at the moment.
yeah, same. I even had some close friends. They've held crypto for years, and now like last week they just decided to sell.
Yeah,
And I'm like,
yeah,
well. So I've seen your recent live streams, and I really like your approach on how you like top down analyze, look at the crypto Bitcoin market. And I didn't really know your charts and from Capriole, but I was really impressed. I gotta say, like there's some really nice on-chain charts, metrics you're looking at, and I would really like for you to maybe share some of your favorite charts and share how you currently view the market, what you are expecting for the coming
yeah,
weeks.
yeah. Sure thing. I'll pull up the screen again. The first one, I find this is the best barometer for where we are at a macro level for Bitcoin. So Energy Value created this in 2019, unchanged since. It's just looking at valuing Bitcoin based on the raw joules of energy spent on mining it. So with all these charts, you can read about it. There's articles as well. But essentially, it's saying the fair value of Bitcoin, just purely based on energy in, is around 115K. And that means we've got about a 43% discount to fair value today. And so whenever that's green, and green here is whenever the discount is about 40%, you can again quickly see that this is, very good opportunities long term anywhere in here, right? So that's the first thing. I think one risk we have now we didn't have in the past is quantum. We could talk about that potentially. I've obviously discussed it a lot in the last 6 months and probably don't want to spend too much time on it, but that's not gone. And effectively, we've broken down all the analysis from the quantum physicists and leading quantum companies of the world about when they think Q-Day will be. And this gives you a probability distribution based on those estimates. And if Q-Day happens before we upgrade Bitcoin, then we need to discount the value of Bitcoin. And there's a whole detailed article breaking that down again here. It's on Substack. But basically, the discount factor for me today is about 25%. So even for me, that's the worst case scenario risk for Bitcoin. Generally optimistic it'll be solved. Generally optimistic this is actually now a catalyst for higher prices, because as soon as there's any traction from implementing code to improve Bitcoin, I think we'll reprice higher and this risk goes away. So that's actually really good. And thirdly, because even when you allow for this risk, we're still well below value on energy value, for example. So they're probably the two high-level guidelines for me in terms of value that say we're in a deep value zone, as we have been for the last month or two. Lots of metrics will align with that. Dynamic range NVT, that's kind of the P ratio of Bitcoin based on transaction throughput to market cap. That's been deeply discounted recently. There's another one here, Yardstick, just values Bitcoin very simply based on hash rate. It's had the lowest levels ever recently. MVRVZ score, not in a deep value zone, but very relatively pretty discounted. The story is pretty consistent across a lot of these metrics. My favorite for timing long-term deep, really amazing opportunities is when Bitcoin trades below its production cost. And that's this red line here, which is at about 45,000 today. That's the cost of just purely running mining rigs in terms of electrical power input. So it doesn't allow for any of the cost of mining, like warehouses, rent, people, any of that stuff. It's just purely the power cost. So whenever we've got there, it's been a pretty rock solid price floor and an incredible opportunity. Some of the best dips have been into that region. That said, we don't have to go there, of course. And something I kind of bear in mind with all this is that we are now obviously, well, we were recently multi-trillion-dollar asset, and we didn't get a lot of, price appreciation that we might expect in the price cycle. Things are moving slower than before because it's a big asset carrying a big market cap. So less euphoria to the upside, but that also probably means less volatility to the downside. And we have seen volatility compression generally for Bitcoin. So long story short, I'm saying we don't have to have a huge dip like we've had in the past. We may, but we don't have to. And so if we get anywhere in this kind of value zone and production costs, amazing. That'd be an area I'd love to back up the truck. But otherwise, you get a consistent message across on-chain metrics that, Bitcoin's in a great opportunity area. Even miner sell pressure, this is just what Bitcoin miners are selling as a percentage of their stack, and it's pretty low right now. And again, a lot of these happen in pretty good, dip opportunities long term. Not always, but it's kind of a confluence of factors that we look for that, when you get lots of metrics lighting up like this, that's kind of exciting. And that's where I am today. We're seeing kind of, ballpark 60 to 80% of metrics are kind of similar to this, and that doesn't usually happen very often. And so that's why I'm liking where Bitcoin is at the moment.
Nice.
On the energy cost or production cost charts, like very interesting charts. But do you think that these metrics basically hold their, let's say, predictive power across the last cycles? Because a lot of things are changing within the mining industry, for instance. They get more professional. They can handle their capex and opex a little bit better. The miners themselves play a less relevant role in terms of supply distribution, let's say, because they just simply mine less. Some miners are also maybe transitioning into the AI sector as they probably get squeezed by more, let's say, more sophisticated mining firms. What's your view on that? So is there a possibility that maybe there's more downside possible than the metric is actually flagging because the industry changed somewhat?
Great points. I totally agree. I think mining is way less relevant today, so probably focused a bit too much on those metrics there. But that said, they've still held as price boundaries very well in the past and still performed really well as confluence factors. As all those kind of, a lot of those points I just showed on the screen were in the last 2 or 3 years. So I wouldn't rely on them alone, but they're great confluence factors. For example, we're in a pretty significant minor capitulation the last 2-3 months. Originally in January, people were saying it's because there was a storm in America, and I was trying to say I don't think so. And it's lasted for months.
I read that as well.
Yeah. And yeah, like you said, people are pivoting to AI, and those kind of stories to me are actually really bullish because we've seen that before where people just abandon. That's why it got called minor capitulations. You'd see hash rates collapse along with price, and that basically suggested people giving up mining because it's too hard, too expensive. They saw better opportunities elsewhere. It's the same with sentiment. It's all sentiment, right? Like that is all saying people are fearful, concerned, and capitulating, and that usually all happens at the bottom. So doesn't mean the bottom is 100% in, but it just means we're in a pretty good value zone long term, in my opinion, over a sort of multi-year horizon. Again, assuming risks like quantum are solved. But onto your point, definitely the more important factors the last 2 years and really 5 years, but especially the last 2 years is institutional buying. So this metric, for example, aggregates all of the ETFs in green and all of the treasury companies in orange and combines them to the blue line to look at their net buying per day versus the red line here, which is the Bitcoin mined on the blockchain. So whenever blue is above red, which is this metric here, it just goes green. That means there's more institutional buying than there is organic supply entering the network. And you can see again here, all of the major price appreciation in the last 5 years has happened when that's green. Well, a lot of the major moves anyway, right? Like just very quickly you can see that. We had a bit of a recovery here, didn't work out, and then more recently. So again, never rely on any one data point, but this has been the era when we've seen tons of, there's almost 200 treasury companies. Yeah, it's 198, as you can see here. And it's really taken off. And the institutions and the miners are, they're holding right now, what is it? 12%, more than 12% of the network, and it's going higher. So these are a much more significant force than miners. If you scroll back 8 years, this was miners, right? But now it's ETFs
definitely.
and treasury companies, and that's the main thing to watch. Even just looking at this as percentage of market cap, you can see when, just eyeballing it, when the total institutional share of market cap flatlines, price didn't go anywhere, right? It just went down and volatile. And when it goes up, we get a lot of the price appreciation. So, no, very scribbly drawing, but that's another metric I really like. And there's tons of metrics we have for that sort of stuff here. One thing that's interesting is percentage of buyers, which has really plummeted for treasury companies. And again, that's another sign of capitulation. We had that in 2022. It's hit an even lower percentage recently.
But this is just the amount of DATs that still buy, or what do you see?
Yeah,
what do we see
percentage based. Yeah.
Okay.
And this one, the count of publicly traded companies buying Bitcoin every day. It hit there were 3 companies buying a day in June last year, and it's completely collapsed to less than half. So, I've spoken about this a lot before. I'm not very optimistic on the long term for treasury companies. But I mean, these kind of capitulations are pretty healthy market cleanses, which often happen at good long-term opportunities.
Agree.
Yeah. And then at the same time, Sailor is buying 100K Bitcoin per week.
Yeah, exactly.
Crazy.
He's basically the only one keeping those numbers positive. Yeah.
Yeah, it's crazy. I just quickly want to go back to before, you now looked at various different, or showed us different Bitcoin charts. Now my question is, are you generally only focused on Bitcoin, or how do you translate this into the broader crypto market space?
Yeah. So generally, I think we our fund, for example, started, and our investment strategy started 7 years ago, and the focus was Bitcoin trading. But I came from this from before that, with a macro equities trading approach, adapted it to Bitcoin based on opportunity. And over the years, we've really doubled down on integrating more and more data into that. I think Bitcoin really is a macro asset now, as is crypto generally. So, you see it with all these world events that we've had in the last few years. You see it with the impacts of monetary policy, interest rates going up, money supply going up, 2020, 2022, interest rates going up. All these asset classes are really tight, especially as it's institutionalized. So it's all one big pool of money that's all trading relatively to each other. So yeah, we're definitely looking at all data across macro, equities, commodities, crypto, and really positioning in all those markets now. Also in other crypto assets, yes, particularly the bigger ones like ETH, but also some others. But generally speaking, I think I'm generally probably less bullish on most crypto assets overall. We've always had a vast majority weighting in Bitcoin trading as opposed to other altcoin trading. We do have other altcoin portfolio strategies, but they're pretty small percentages of the portfolio broadly. And the reasons basically, most of the other assets don't have real utility. They don't, they have really bad supply token models. So if you just look at tokenomics alone and actual revenue growth of a working product, then you'll eliminate 99.999% of products. So the universe is pretty small for like hard tokenomics, fixed supply, or token burn economics alongside real product utility. It's like you've only got a handful of products left in crypto. The other factor is just this asset class is so highly correlated. And that's one of the main reasons we expanded into actually trading macro assets a few years ago as well in the portfolio, because whenever you have a bear market, which typically is a year, maybe up to 2, everything is goes down magnitudes more, as you guys know, against Bitcoin. Even just last year, 2025 was not really that much of a bear market, but if you looked at the new listings on Binance, they're on average down 95%. So
Yeah, it's crazy.
so that's kind of like over the years of being pretty consistent in that philosophy of being focused on the bigger player of Bitcoin in the crypto space. We do trade opportunistically the others at times, but the weightings are relatively small.
Yeah, well, that was a nice strategy for the last couple of years for sure.
I mean, we don't get it right every time, but I think if you're going to be playing in the alt space, you have to definitely have a strategy which prioritizes cash, and then just jumps in for shorter periods based on whatever data set you're looking at or market conditions you're observing, and then kind of jump back to cash pretty aggressively.
Yeah, I think overall markets also agree with you. Also, if you check the ETFs, they are very large cap focused, right? And if you think about how the market is distributed, it's way more top heavy than the Nasdaq, for instance. I think just 7% of the market capitalization is outside of the top 10 in crypto. And what we saw recently. Yeah, go ahead. Sorry if you want to.
No. Just totally agree. Like all the big capital flows are only Bitcoin ETH really at the moment. Maybe some Solana, right? I think also we have the unknown risks coming out with AI in the next sort of 6, 12, 24 months. Like you guys would have heard about Mythos AI, and they're not releasing to the public because it's breaching all these security standards that no human ever found before. They've given Mythos to, short list of private companies like Microsoft and Apple, as far as I'm aware, those sort of companies to patch up these bugs, but no crypto organizations have access to Mythos. So like as soon as this thing goes public, or ChatGPT is the same in 3 or 6 months, we're going to get a massive wave of, I think, smart contract and protocol hacks, because there'll be so many gaps that have been missed along the years, I'm sure. So that kind of stuff makes me even more like, long-term pessimistic on this stuff. I think, if Bitcoin has bottomed and it shoots up now a lot, there's going to be alts that go up way more. So I don't want to suggest that this asset class of alts is dead, but there's a lot of long-term risks and you have to be really agile.
Super interesting points on the AI improvements. I feel it's still good to see that you're quite constructive on Bitcoin right now. I wanted to spend some time on the quantum topic. I think your content speaks for itself. I would not call you an alarmist, maybe, but something that is like reasonably concerned about the risk. Just recently, we saw multiple breakthrough papers where Google found that they can optimize Shor's algorithm in order to basically need way less qubits to crack the signature schemes of Bitcoin. We also see that Google or Cloudflare, they are accelerating their post-quantum timelines. Timelines are long for migration. At the same time, the timelines for this post-quantum potential attack is basically compressing. Guide us through what you observe right now in the markets within the developer spectrum. What makes you a little bit less concerned right now?
Yeah. So this is my biggest concern with Bitcoin. I'm pretty worried about it, to be honest. I don't know how constructive I am. I'm constructive and optimistic from an investor point of view because we had such a big discount. So I say today it's fully priced in, the risk, and more so. So for me, that means it's a good opportunity in the near term. But it's kind of like oil we talked about before. If oil remains high for a 12, 24 months, it's going to put a lot of pressure on markets and create issues and potential repricing. It's the same with quantum. If we do nothing for 2 years, I probably won't have any Bitcoin. So there is a time limit to some of this stuff. My biggest concern is that the Bitcoin core team is basically ignoring it. And now if you go on social media, you'll hear people say some of the opposite. They did BIP 360, blah, blah, blah. Basically, they put some code in to basically as a stepping stone to support some quantum proof activity, but nothing of tangible consequence. We need to have post-quantum signatures implemented as soon as possible. We need to then migrate all the active users to that. We need to have a solution, or at least a broad acceptance of that we're going to do nothing or do something with the 30% of lost coins, which a quantum hacker will take at some point in the next 5 to 10 years. And the main reason I kind of got really vocal on this and wrote a lot about it, spoke about it at conferences in the last 6-12 months is because I've been monitoring it in the background for years, and it's never been anything on the horizon. It's always been 5-10 years away. But now we're at a point where there's a non-zero threat of quantum existing in the next year or two. The probability is very low, but it's non-zero, and it jumps to 20-30+% in 2-3 years of a quantum computer existing that can trigger Q-Day and can, by therefore that definition, break Bitcoin's encryption. So that's the problem. And as you mentioned, the timelines upgrade are really long because of consensus, because just network traffic, moving people once you get a solution. We still don't have really good solutions or options yet for how we would implement post-quantum signatures on chain. There's definitely viable tech solutions out there, but the problem is most of those signature methods consume a lot of space, and that would mean congestion on the blockchain. So either there's many options, right? It's all solvable, but either we could accept that and there's just slower throughput, or we could make the block size bigger. That opens up the block size discussion. Or we could experiment with different signature methods, which should work and have less space, but it's different trade-offs that have to be considered.
Yeah.
So all technically solvable and all within the timeframes that are probably okay still, but the risk is non-zero now. That's why I said I discount it by about 25% today, and it's growing every day a little bit. The problem really is that most of the Bitcoin core team are dismissing it and saying, "Oh, quantum's 10 years away. It's not going to happen." It's some of the biggest core developers recently said that's not even our top 100 priorities, and I'm just like, how?
Okay,
for me, this is the only priority that Bitcoin should have, and nothing else matters. Who cares about JPEGs and whatever happening on the Lightning Network? Who cares? This is the only thing that matters. And at the same time, you see, institutions are talking about it, deallocating to Bitcoin because of it, or they have in the last 3-6 months. It's on all the ETFs and disclaimers. It's been removed from some Wall Street portfolios. Ethereum has now made it the number one priority to solve quantum. So that's a great news step that they've set up a team for that about 4 or 6 weeks ago. So I think there's becoming more and more pressure on the Bitcoin ecosystem to do something that's positive. Michael Saylor also dismissed it, but yet he set up a security team which is funded to work on it. There's many such similar cases where people that have actively dismissed it in Bitcoin companies are now saying, "Oh, we're doing some research on it, or we're funding something on it." But until we get the 5 or 10 key people in Bitcoin core team working on something there, or at least acknowledging it, it's pretty concerning just because of the timeframes that you touched on. For me, right now, I think it's actually a value opportunity in terms of where price is at, but also because, it's been dismissed so long. What are the possible outcomes from here? Either they keep dismissing it for another year or two, and then the risk gradually grows, and there's going to be more and more pressure from everyone, organizations, banks, everyone on the core team to do something, from Ethereum outperforming because it's doing something.
Yeah.
Or the more likely outcome is that they go, "Okay, we should just probably work on this now because it's going to help everything. Adoption, price. We're going to stop getting annoyed from it by people. And it's more likely now that 1 or 2 or 3 core developers will actually start talking about it and doing something next 12 months, in my opinion. And so for me, any event where you get 1, 2, or 3 of the main core guys saying something like that they're working on it, they're doing something, or it's now a priority, I think you're going to get a big repricing in Bitcoin up because a lot of the risk will just disappear overnight. So I think I'm waiting for that kind of moment to happen. I'm hoping that will happen the next year. If it hasn't, I'm going to be progressively more and more bearish or concerned with where things are going. But I think it's more likely than not that we do get progress at some point.
Yeah, that's a fair take. I also like your timeline. So roughly 12 months you want to see a strong, maybe tangible signal out of the maybe core developers or somebody else that rallies around Bitcoin and has some kind of governance influence. I think it's very, very interesting what you just touched on with if we transition the Bitcoin network into a post-quantum state, it would also mean that we need to integrate like more chunky signature schemes, which will drop the TPS to 0.3 or maybe even lower, which is madness. So I think it's quite fair to anticipate that we will basically see also bigger blocks alongside. Maybe that's just a small part of this conversation. What I would be keen to know is like, which factors or metrics are you, or what data are you actually looking at to derive that Bitcoin is pricing in a quantum risk already? I know, for instance, maybe you can take the 25 underperformance against gold or equities, or some people say, hey, Bitcoin Cash outperformed Bitcoin, for instance. I'm not sure about that. Then the other factor you just mentioned is that there are also some impacts on allocation ceilings already, or allocation caps, where Jefferies, for instance, removed Bitcoin out of quantum concerns. So what is it that you are looking at and that leads you to believe that most of the quantum, or at least a considerable amount of the quantum risk is priced in already?
Yeah, let me kind of walk through a couple of charts.
Yeah.
So this
Sure.
is a Substack article if you want to read more about it later, but I'll just skip through a couple of charts. What kind of got me convinced on this, 12, 18 months ago. So last year, 2025 is the year after the halving. Normally that's the most performant or one of the most performant years, and it was a negative year. So that was the first thing that looked odd, right? And that was all happening when Bitcoin's inflation dropped below gold, making it the hardest asset in the world. So it should have been the most bullish case for it.
Agree, yeah.
At the same time, gold gained 11 trillion last year, 67%. And normally Bitcoin always follows gold. So this is a rolling 2-year correlation against gold. It's positive almost all the time, except 2016 when Bitcoin went up. So this is the last year, and even this year was the first time Bitcoin's gone down when gold's gone up. Except, it's the first time ever that Bitcoin went down and there was a negative correlation. So just weird things are happening. We had really strong money supply come into the system. We had the most comparable asset going through the roof, where Bitcoin normally follows, these green zones here every time gold goes up. Bitcoin has, and we're doing the opposite, exact opposite. So what was going on, right? Like there was the first inaugural Bitcoin Quantum Summit mid last year, and then from that point, Bitcoin went down over 50% until last month versus gold and S&P 500. So it just started getting into the mainstream. It's also the first time we entered what I call the quantum event horizon. That is, the time to upgrade Bitcoin is now equal to or more than the time to a non-zero quantum threat. So that had never existed before until the last 12 months. And this is some of the quotes touching on here. So Jefferies deallocated Bitcoin because of the quantum risk. VanEck said they were around before Bitcoin and they'll walk away if the quantum encryption risk keeps growing effectively. Kevin O'Leary said that he's limiting, institutions are limiting allocations until quantum is resolved. So there were lots of quotes like this coming out through that last 6 months that really aligned with what I was seeing in the data, the timelines of quantum, the threats, and institutions were just confirming it. So that kind of where I get the aggregate risk and Q-Day estimate is we've kind of screened all of the top quantum companies and physicists in the space and when they're estimating Q-Day. And there's direct quotes and links, and there's the calculation logic in a spreadsheet if you want to dive into it another time. But essentially, it all converges within the next 9 years. That basically every estimate is within 9 years. So when you hear people like Sale saying, "Oh, it's 10 plus years away," no one is saying it's 10 plus years away. Like Google, obviously that is more recent news than when this was written, but their estimate aligns exactly with what I'm saying. And no one is saying more than 10 years. It's all within 9 years, and it's like an 80% probability within 5, right? So 2031 is like 80% of these firms and these physicists are expecting Q-Day.
Yeah.
And that will be plenty of qubit power to break Bitcoin.
Yeah.
A lot of people will say, "Oh, there's not enough there's only a few qubits today. There's too much error." Like all of these metrics are improving linearly on log charts, right? Like exponential growth, the same as we had with AI. AI was not very good in 2021. Even Sam Altman said ChatGPT was no good back then. But then within a couple of years, if you go on the exponential curve, it's incredible what you see. So you have to allow for that. And that's kind of where the data brings you. So what we then did is we discounted this probability of Q-Day by the time of about 2 years to upgrade Bitcoin. That includes development time, code time, rollout time, upgrading wallets, moving users' money, etc. And that's how we got that kind of Q-Day discount risk factor here, which is why I'm discounting Bitcoin's value by about 25% this year. Next year, that grows to 40 and then 60 at the end of the year. And then, once we're anywhere up here, if there's no traction on quantum, I'll probably be out. But again, as soon as any Bitcoin core developer, not any, at least someone significant and ideally more than one, says we're working on this, it's a priority, or we're drafting code or whatever, I think a lot of this risk instantly drops because the probability of them rolling that out before Q-Day happening is still very high today. So you don't want to be too bearish with these kind of things. How many people said Amazon was stuffed 10, 20 years ago, right? When they were just losing money, and same with Apple and all these tech companies, all these growth stories of the biggest companies in the world, they were often negative cash flows. People were saying they were going to fail. Same with Bitcoin historically. And usually optimism and human ingenuity and problem solving wins in the long run. So I remain optimistic that the opportunity is skewed to the upside, but we do have to see traction in the next 1 to 2 years.
Yeah, I agree. Especially like given these like accelerating timelines across the industry. And it's just a weird thing for a digital money to say, okay, there's some unknowns, so I stay inactive. That's not kind of the way to go, to be honest.
Yeah.
I'm keen to see, still, like from my point of view, it's still like, as I understand, a very hard engineering problem. So they still have to kind of this error reduction, I think, is still like one of the major engineering problems. Once they figure that out, I think quantum then scales quite substantially, and you get to these qubit ranges where cracking Bitcoin signatures is very reasonable. I think what's key is, and what I'm trying to understand from your discount model is, so there's two types of attacks we are dealing with. One, we have like let's say a sufficiently powerful quantum computer. It's short-range attacks and long-range attacks. Long-range attacks is basically this 30% of the supply that you just mentioned that is in reused addresses or old address types where you can do this harvest now and decrypt later attack. so it's not like timely sensitive. I do believe that I think only 10% of the supply is in really dormant coins and maybe Satoshi coins, right? These will be up for grabs, very likely. Keen to know your potential solution on what we do with Satoshi coins. So I do believe that there's a high probability that the other 20% of the supply might migrate to an address that is not reused, for instance. And then the short range attacks now become possible with these recent papers where you can actually broadcast a transaction and then it gets attacked within the mempool, which is a huge problem, right? And then you really need a post-quantum Bitcoin. So what is your model assuming, I guess, the short range attacks if you discount it for 100%, right?
Yeah, so everything you said is exactly right. The model that I just showed is really simple. It's just saying if Q-Day exists, effectively the value is 0, right? Because if you can and assuming, again, no upgrade. So at the moment, there's no upgrade on the horizon. There's no alignment on core developers. That will change, like I said, very quickly if they start doing something. But for now, it doesn't. And the assumption there is that like if you have a quantum computer that exists powerful enough to break an asset which relies on pure trust in the code, the code's worth nothing, right? Like, or it's significantly discounted enough that you don't want to be holding it, in my opinion. So you could argue the numbers are a bit aggressive. You could say that if there's a Q-Day scenario that maybe Bitcoin's still worth 50%, right? And then you should halve the numbers in my article, and I'd be more conservative. So there's definitely arguments to that. I just wanted to keep it simple and really easy to digest, and then you can overlay your own assumptions like that in your own positioning.
Yeah, that's fair, but also very, very important to understand. So maybe you could also model something where just 10% of the supply, maybe Satoshi's coins, are basically up for capture, let's say. And then probably a more sophisticated hacker might not just market sell them. So it will be like a consistent sell pressure across a multi-month period, very likely.
Yeah, there's many scenarios like that could happen. For me, I think all of them end up in pretty catastrophic events. Like if 10% of the coins are taken, Satoshi's coins move or whatever, a lot of you just have to go to the rich list on for Bitcoin. There's like all the big exchanges, wallets are public, sitting there. You could knock it. I mean, if you're a hacker, you're not going to target them first because you want to sell coins, you want to make some money. Everyone has a different view of Bitcoin, but I think for me, the most valuable is that it's a hard money with a constrained supply. Once you know that that's no longer true, or if you can't trust the code that guarantees that, the value prop collapses really quickly. So
I agree.
Yeah. So I like if you game theory all this stuff out, I think it just ends really badly if we don't solve this. I think probably if the worst case scenario is probably something like this, like the core developers say they're not going to do anything or they're too late, whatever, 5-10% gets stolen and sold, and then people panic, Bitcoin crashes, I don't know, 70-80%, we have a huge bear market, then the core team's like, okay, we better do something, they upgrade it, and then Bitcoin in theory could recover from there. But it would probably be the worst bear market we ever had. Bitcoin would still exist, like Bitcoin's not going away.
Sure.
But I mean, recovering from that kind of event, I mean, it would be like FTX times 1,000, I think, because you're always going to question mark technology risk. So we just don't want to have that happen. And if we don't need to, we can just solve it now. And I'm optimistic that we will.
Yeah, I agree. It would I fully agree. Like it would jinx this perfect ideological monetary sandbox to some degree. Unfortunately, I mean, it will also jinx it if we freeze Satoshi's coins, for instance, or lock them or burn them, or it's kind of a Sophie's choice setting where I have to take a decision, but both are kind of not really nice. I think maybe let's touch some form of you spoke about this institutional source of demand that is kind of novel to Bitcoin in the recent months, maybe last 2 years, that is also getting more powerful, spread across ETFs and DATs. You could argue that they also have a governance influence. In your view, like how does it change this like entire ownership structure and Bitcoin itself? If you think about now 12% are spread across DATs and ETFs. What impact does that have?
Yeah, I mean, big questions and hard to answer. Many scenarios could play out. I think kind of back to 6-7 years ago when we didn't have any of this stuff. It was just miners and retail traders. And back then the big discussion was, Bitcoin's centralizing on exchanges. And we did some analysis of that. You could see the percentage of coins on exchanges was going up. And we kind of wondered where that would go and what that meant for an asset that was meant to be decentralized and self-custody in theory, and what risks that meant. And, people worried about that. But then it kind of, at some point, that trend flipped and went down slowly. And then institutions came up as well. So it's really dynamic. It's hard to imagine where all these numbers will be in the future. But I think if Bitcoin's successful, institutions will definitely grow their stake from here. The one uncertainty I have there is the treasury companies, because I don't think their business model is sustainable long term. But ETFs for sure. And generally that's good for volatility, price action, like you talk about, because a lot of people buying those assets are not trading them as actively. And generally institutions are holding for the long term. So you get less. So it's basically kind of like locking up some supply in some format, a soft lock, which means that price can go up higher and have less volatility. And we've just seen that year over year, every year, more or less, the volatility falls with time. And that's expected because we've got an asset that was very small becoming a big asset, and volatility will compress over time. So yeah, I think we want institutional adoption. That's where a lot of the big money in the world is. We want to see that continue. And it's, the one concern I probably have there is if you fast forward, and it's not really a concern because it's so far away and we don't know what the world will look like, but if you fast forward 10 or 20 years, obviously the world's going to be so different, it's hard to really map this out. But right now, the fees that miners get for the security of Bitcoin are so negligible. If you exclude the block reward, it's actually declined in the last 5 years a lot. So no one would mine under the current fee structure. So either Bitcoin's price goes way up and the block reward's still really attractive. That could happen. But if it doesn't, or if there's a scenario where Bitcoin's volatility continues to compress, maybe Bitcoin's at 10 trillion, right? And whatever, $1 million a coin, some big number. But if the block reward's too small and the fees are too small, then that's going to start creating security issues, right? So that'll probably be a whole future problem to address. Not a problem right now, nowhere near it. But they're the kind of scenarios you need to think about. The reason I mention that is because as Bitcoin is centralized into wallets like ETFs, there's less on-chain transactions. And we've seen that as well, because people are not moving their money around as much. So if those trends continue, that may be a future problem, but it's a long way down the track that it's not. Again, it's like quantum 10 years ago. It's not worth worrying about.
Yeah, fair.
Yeah, what I just right now think is so interesting, that if you think back to last year, everyone was talking about this institutional adoption and people were talking about the supply crisis of Bitcoin. And I saw in a tweet from March from you that institutions are actually buying like 5 times the amount of mined Bitcoin currently. And then last week, Morgan Stanley launched their spot Bitcoin ETF. I think yesterday Goldman Sachs also announced that they're gonna launch a Bitcoin ETF. There's just so much happening, I feel like, right now, currently in the last couple of weeks, but no one's really like talking about it, or it's kind of underreported in my point of view.
Yeah, this happens every cycle. If price goes down enough, people lose interest and trust and faith. And a lot of these fundamentally good things happen, and that's when the opportunities are really there. And in some ways, these environment is better because, or I enjoy it sometimes a bit more because you clear out a lot of the froth and the craziness, and then people just focus more on the fundamentals. I think we're more likely to get resolution on quantum when price is lower because people
True.
want to be more proactive.
Yeah.
The people that stick around in Bitcoin are those that want to work on it, solve it, are there for the long term, more realistic. So you can get a lot more things done actually in the bear markets. So that's something to be optimistic about.
So one topic I wanted to discuss with you is when we think back 2024 and even before, we had like the whole US election narrative, and then we had the strategic Bitcoin reserve narrative, which kind of worked for the whole of crypto. So if you think back, but over the last couple months, there wasn't, we didn't have really like a narrative or a positive catalyst for our whole space, and people are kind of losing like the vision. Where are we going? What could take us to the next level, or like to end this bear market kind of? And of course, there's some specific narratives for specific protocols like Hyperliquid, for example, or prediction markets. Also, privacy was pretty big in the last couple months. You mentioned the quantum readiness resolution, that some of the Bitcoin core devs get vocal about this point. That could be a catalyst in the future. Is there anything else that you're currently watching that you think could serve as a narrative or a positive catalyst in the coming months that maybe people are right now not really observing or talking about?
Yeah, I mean, you can sometimes get catalysts like that. Could be the Trump election, could be the core team saying they're going to do something in quantum. But that's more often the exception to the rule. Usually the market will bottom on bad news. Like you'll have the FTX crash, right? It couldn't have gotten any worse at that time, right? Where you got hacks and frauds everywhere. No one trusted exchanges. People pulling money, selling, everything was going on wrong, right? And that was the exact market bottom. And we just basically went straight up from there. Similar in mid 2021, half Bitcoin's mining was done in China. And that just switched off almost overnight, literally. And, there was a lot of concern, right? Like the whole 50% of securities went offline and was getting steamrolled by the government. And yet, we crashed, and then within a few weeks we bottomed and price went up a lot. So you don't actually need any kind of narrative or story. It's often the opposite. It's often these exact conditions where you have a lot of fear, concern in the market. People are leaving for AI. People don't see where the future is. But the core value prop is all that matters. And that is Bitcoin is hard money. It's the lowest inflation rate with certainty asset in the world. And it works in the digital world that we're in. You can take it anywhere, right? All those key benefits that we're all here for exist. And as long as they exist, then... And as long as the fundamentals are progressing well, then that's all that matters. So when FTX crashed, it was actually a really deep fundamental opportunity. Today's not as deep, but it's still not far off it. And you see some things change. Like the key one would probably be long-term holders who were basically selling nonstop for the last 2 years. They typically will do that into the bull market as they're in profit. So I'll just quickly share that slide. My favorite one of these metrics, they're all useful, but is just as very simple. Those that have held Bitcoin for more than 2 years. If you've held Bitcoin for more than 2 years, generally speaking, you're probably going to hold for the long term. And this is percentage supply of the network they own. And every time that starts to bottom and then trend up, you tend to have strong price appreciation. Again here, so bottomed a bit, starts to trend up.
Yeah.
We had a bit with the US election, and then we're getting right now, it's just really ticked up.
Oh, nice, yeah.
So these are really positive things. The opposite of that is when they start selling, they usually start selling as the bull market takes off. And that usually tells you you've only got a few months left of opportunity generally, right? Again, all these metrics, you can't rely on them individually. You need to layer multiple together, but this is actually a really good metric, as you can pretty quickly see that every time it kind of tops, it goes down. You got a few months of opportunity ahead. There is some nuance in this period here, because that's exactly when the ETFs launched, and so you had a lot of capital rotating wallets and into ETFs, and so an ETF is not a long-term holder, and this, by this metric at least, for 2 years. So that means there's a lot of volatility here, which may not have actually been real. Maybe the chart should have looked like that if you could somehow combine the owners of wallets with their ETF holdings, which obviously you can't do on chain. However, now that ETFs have been live over 2 years, that's not a risk factor in this data, and the data's on that regard clean. So we can basically trust this metric pretty holistically, I'd say, today.
Nice.
So yeah,
Okay.
those are the kind of factors for me that matter more than any kind of catalyst. It's the fundamentals are strong. We got relative strength on Bitcoin against all other assets in the last few weeks. We're trading in a value zone. There's just, for me, this is a really strong opportunity.
Yeah.
Right now.
But still, I really like your point. At least as I understood it, like in a bull market, when the market is trending up, you're looking for like positive catalysts to maybe get some more price action to the upside. But now, when prices are going down, maybe I had it wrong in my head when I was looking for a positive catalyst. Maybe this whole quantum discussion was the the negative catalyst for it to bottom, or maybe the midterms could be another negative sentiment peak in the next half year.
Yeah. Relative strength with price is a really good signal. So what I mean by that is when it either outperforms other markets like it has, or when there's really bad news and then price doesn't go down, or price actually goes up. So it kind of does the opposite of what you'd expect. And whenever that happens, it's always like, what's going on? And then that's usually the market saying, well, this is all priced in. I'm done with this. The risk's all behind me, sort of thing.
Yeah.
And we've seen that with Bitcoin going above 71,000, which is a pretty key weekly level amidst all this war and everything. It's up 11% against the S&P 500 since the war started.
Yeah.
Yet it's been the ultimate risk off asset for the last year, but that's all flipped in the last 2-3 weeks. So those are very strong signals that you usually only get every couple of years, in my experience. Yeah,
I think before we wrap up, we are keen to see your mental model on the upcoming months, maybe some kind of outlook. What do you think? How does, as last year, somehow the 4-year cycle was quite accurate again, and there are many analysts out there that also digest different indicators, and I think many indicators where we have consensus are pointing to that we are entering some form of accumulation range. But there's also many out there that claim, hey, we will deal with a couple more months, maybe until end of Q2, beginning Q4 with the bear market and more downturns. Also claiming I don't know, maybe we hit 40 to 50K. So what's your view on the next couple of months in terms of positioning? How do you approach that? How do you approach the midterms? How do you approach, for instance, also the ETH-BTC ratio? Is this something you are constructive on because of this quantum topic? Just share your thoughts, please.
Yeah. So just firstly, I think you said it well. Seller exhaustion was the key signal, and that happened. So that metric I just had, the hodlers, the 2-year hodlers growth rate, percentage of market cap, it only started to tick up basically the day after the war, right? That was a really strong sign that there's just at some point no more sellers left, and even when you get bad news, prices will move, and that's a really strong investing signal across any market, really. So yeah, general outlook, I don't really believe in the Bitcoin cycle anymore as it exists historically, because what we talked about earlier, the miners don't have a huge influence on supply anymore. The institutions are all that matter. So on that, my cycle is kind of driven by institutional buying and selling. So they were selling a lot at the end of last year and early this year, and now they're net buyers. So that for me is bullish, and I kind of don't, want to frame it much more longer term, because I kind of review these metrics. Obviously, we trade them systematically, but I monitor them day to day, week to week, and see where that setup is right now. Given all the information I have, I think Bitcoin goes to at least 80, maybe 82K, and then we'll see if this strength can hold. That's firstly a bit of a technical level, but we'll also see where the data is at that point, right? Like maybe institutions aren't buying in at that point in a week or two or three or whenever it is. I really just want to see where the data is at that point. But right now, I'm expecting we kind of just go straight there pretty soon. But, that would be invalidated if we close a weekly or a monthly below 71K as a key level.
Yep.
So technicals are good in the short term for managing that risk. And then for me, it's about sizing relatively to the opportunity at present, which is pretty good right now. So, I mean, gun to head, if I had to guess the next months, I think we're going much higher. I think and I hope that we'll see some progress on quantum in the next 6-9 months, some kind of announcement, and then we can go a lot higher. If we don't get that, then maybe we'll just have a volatile, choppy, rangy year.
Yeah.
And no new all-time high. But yeah, I mean, if we get measurable traction on quantum, we could have a new all-time high very quickly, I think. If we don't, we may not get one. So that's kind of where I'm at, and I remain pretty fluid outside of those those thoughts based on what the data is telling me. Right now, it tells me to be long, but obviously not financial advice.
Yeah, sure. We have a disclaimer as well, so don't worry. I think that's very reasonable takes, and also a good perspective maybe to end our great discussion. So maybe the takeaway is more upside very likely, but it all hinges on quantum progress. That's the key variable in the current equation. So Charles, thank you very much for joining us today.
Thank you. Me too. I really enjoyed it. Thanks, Dominic and Luca.
Very nice. Thanks.
Enjoy the chat. We'll do it again sometime.